thanks Shweta, Shreya, and the USISPF team for having us over. It's a continued journey for us. We're an extended part of USISPF, and we're grateful for that. The way we structured the next 40 minutes is that we'll spend about 5 to 7 minutes on our survey and on a little over 30 minutes on the recent council meeting, and 15 minutes take Q&A. I will pause after the survey to be able to, take any comments, constructive suggestions, feedback. This is not the comprehensive survey. The comprehensive survey is something that I'll put in the chat box, which Shweta has kindly shared with all of you. I do recognize as well that many of you have been part of the, the survey process and provided your valuable inputs. So extremely grateful for that support. I'll run the survey, then I will just make some opening comments on the a few important announcements on the council and hand over to DPN sir, as we fondly call him. So is a senior advisor at Deloitte and was a former member of the board, and many of you may already have met him and certainly know of him. I perhaps need a much longer introduction that he does, but we'll save that for another day. What we have on next slide is in terms of the experience. This year, when we got into the survey, we expanded the number of participants to 760. Can we move to the next slide, please, Ankita? Yeah, thank you. So we did have, 1/3 of them, or 28%, at the MSME industry sector, and large and very large companies. The representatives are across sectors of consumer, ERI, life science, TMT, banking, BFSI as we call it, and government services as well. Over 40 questions and run by a professional survey agency that we have been using the last 2 years and this year as well. So what's the results been? First, I was a little nervous given that this year is an audit year, how the results would be. But as we move on to the next slide, we will see that the positives have actually moved up to be 84% from 72% of last year. It's heartening to note that this is particularly in an audit year, the positives have gone up, which is great. And the neutral was 22%, and that's gone down to 11. Now, I don't think this is an examination or, in a sense, a scorecard, and that's it. There's far, far, far more. This is one of the 40 questions. And we go into analysis of what was the positives, what were the asks. The 5 areas of the positives have been technology, enhanced supply chain efficiencies, which is the nature of GST, but each passing year, we are seeing, that to be a very common answer across the large and very large and MSME as well. The participants have actually responded saying, the government has done extremely well in enhanced stakeholder management. 48% have said that, and 52% have said the circulars have been good. And while the primary agenda today is not the survey, but there is a lot of details that within circulars, 55% have said we will continue to welcome circulars. 41 have said we welcome, but we worry about the implementation of the circular. So at least 96% is in a way still, looking forward to continued clarity on certain aspects where we come in as USISPF from a policy engagement. Moving on, I think, like I said, the numbers do tell a story, but what are the key survey findings? The sentiment is positive. The top performance area of automation is the number one area that's given a thumbs up, followed by stakeholder engagement. What are the asks been? There was an ask, and we released this survey 10 days ago before the council meeting, actually last Monday, and amnesty scheme was an ask saying for the teething trouble of the initial years, particularly for 2A, 3B, there should be an amnesty of sorts. There were different other amnesties sought, but this is the resounding number one amnesty that was sought, which I know jumping the gun has come through in some form and shape in a very positive manner in the council meeting. Audit challenges was again highlighted as the distance number one, with multiple audits and parallel proceedings to be a big pain point. Legal interpretation continuing, and there's been a resounding ask for faceless assessment. It's interesting that when we do hear about income tax experience on faceless assessment, it's a classic thing that think twice what you ask in life. But again, I think there are some positives of faceless assessment, and perhaps industry and the respondents believe that the faceless assessment will at least from a first perspective, unless it's a full-blown audit, it should be done desktop, and I should get a communication back. That's how we read it. That's another fourth point number 4. Last point is effective dispute resolution. I think clearly with the tribunal not yet being in place, that was called out to be a concern area, but coupled with that was called out to be the pre-deposits, which we all know are currently 10% plus 20%. And we all know that even before the appeal is actually filed, in the time frame pending appeal, we are asked to pay that money. The cap is 50 crores and 100 crores respectively. So, almost 70% have asked for a reduction in the pre-deposit, again jumping the gun that has come through after a lot of painstaking representation and advocacy. So happy to pause here because, like I said, I don't want to hijack the agenda today to Deloitte's survey. It's there. I'm voicing over it. But as we progress into the next part of our meeting and conversation, we will talk a little bit about not about what USISPF has asked, but also what respondents at large, are asking. Is what I would summarize. So let me pause here. Happy to take any questions. Or Shweta, I saw your message to request for the questions in the chat box in interest of time. So maybe some questions can be typed in, or we just move on to the the center stage of the survey of the council meeting.
Sure, Mahesh. I don't see any question as yet, so maybe we continue,
Sure.
And I'll keep an eye on the questions, and of course, if anybody wants to, raise a point by speaking, so I'll let you know. We can continue.
All right, great, thank you. I'll take this one slide, DPN sir, as we discussed, and I'll then hand it over to you, sir. 9 key wins, as I would say. Reduction in the TCS rate. It does apply for e-commerce, but I think it's a trailer to things to come, where it seems to be that the point that USISPF has been making, that the TDS, TCS are important mechanisms and machinery in the tax laws to be able to have a robust tracking, but it should not be used for revenue augmentation. To me, it's a very bold step, and it will help working capital, needs, particularly of the MSME sellers on platforms, whether big, small, or medium size. The GST law amendment on the pre-deposit, I talked about it being an ask, not only in our survey, but in a formal document by USISPF. That's come through. We'll go through in greater depth what is the threshold and what is the percentage as we speak. 3 big clarifications. I know it's taken, I would say, I'm going on a limb to say that these 3 clarifications alone should result in drop of demands of at least 10,000 crores or potential live work in play demands. And I think that includes import of service without, from a group entity where you're fully eligible to ITC. As you all know, Circular 199 has that domestic cross charge where your full credit is available, then its zero value shall be deemed to be open market value. Our representation has been that just follow that rather than trying to give different things, because many of our members had informed us that particularly for their shared service centers, they're getting queries that why aren't you paying for the brand? Why aren't you paying for FOC software? And in April 2020, there was a chairman letter. I remember it's the beginning of the pandemic, but I was very, in a way, said my investigation arm has done a good job and collected 21 crores from a large MNC for FOC software. And I was like, oh my God, this is just a start of many, many complications. But it's 4 years later. But while we are waiting for the fine print, we don't, unless there's a slip between the cup and the lip on the language, we expect it to be in line of the domestic 199 circular. And therefore, if you're into a taxable business, you're off the hook. The third category was like stewardship services. Are you getting loan services free of cost? So the list kept going, and it's an endless game when it's FOC, because it's a very subjective interpretation. And the overarching point that the members were telling us is their OECD and their transfer pricing position was not necessarily accepted, and it was just being expanded. And since it was subjective, when you start valuing something like that, because there's no real underlying price, it could be my word versus somebody else, and that story will continue. So very timely, because let's not forget August 5th, 2024 is the period of limitation for show cause notice for the first year of 17-18. And we'll have to watch the space. The circular coming out should help all of you. If you do have a dispute on this matter, all that you have to do is submit this and get your matter put to bed. Similarly, corporate guarantees, there was a lot of heartburn in the October 2023 rule amendment as well as circular. We are waiting for the fine print, but what has come out is that if you are in a taxable business, again, your nil value should be accepted. So we expect that to be there. ESOP, ESPP, RSU, as USISPF, we did at least half a dozen meetings because we not only submitted what is indirect tax or GST, we talked about the accounting, we talked about the income tax, the interplay, and we were called upon on a couple of occasions to keep explaining. But and therefore, this in a way is what we expect as a full relief. Supply of goods for unregistered persons, again, an e-commerce sector, it's 10.1 CA, but I won't get into that now. We'll go into a little later in depth later. The next 2 points are on rate of tax, whether on compensation cess for supplies to the MOD unit run, canteens, and 5% for the import, which is on the GST front for MRO related activities. So if the focus seems to have been a lot on the legal changes that have to catch the bus before the budget, there have been a host of circulars that seem to have come through. And from a fitment committee, there have been some changes, not the most, because as we proceed, we will talk a little bit about the newly constituted GOM and what's in store for the months ahead. Place of supply for custodian services for bank has also been clarified. We'll cover that in greater depth as we speak. So I'll pause and hand over, DPN. So maybe you want to take over the next section. And the next section is nothing but a little more detail of the recommendations, but also providing you some insight on the business impact. Over to you, sir.
Thank you, Mahesh. Good afternoon to everyone. Indeed grateful to Shweta on behalf of USISF organizing this program immediately after 4 days of the GST Council meeting. All of the participants must have gone through the press release issued on the day of the council meeting on 22nd June 2024. We are awaiting the circulars. Probably by today, tomorrow, it should be out. But some of those legal amendments which are proposed to be incorporated in the finance bill, we need to wait for the presentation of the full-fledged budget on the floor of the House to understand what are the proposed changes in the law. If you look at the 53rd GST Council, which has met after nearly 8.5 months, I think there's a whole lot of issues on which I think there has been continuous engagement with the government by various stakeholders. We are a part of that discussions as well, along with USISF as well as Deloitte on its own. A number of issues which are flagged to the government has seen some response, and most of them are in favor of the trade and industry. And that's very heartening to note. And some of the issues which the government has gone into and clarified would, as Mahesh rightly put it, would prevent avoidable litigation and also remove the pain points in terms of, I think, uncertain outcomes in proceedings of litigative nature. One of the major decisions taken at the 53rd GST Council, though it may not be of much interest to the participants in this group, is with regard to the extra neutral alcohol. Extra neutral alcohol was pain point. It had come for discussions at least in 4 GST Council meetings in the past 7 years, and decisions were deferred. And in the last GST Council meeting, the finance ministers made it very clear that the union government has no intention to levy GST on extra neutral alcohol, which is used for manufacture of portable alcohol for human consumption. This council has gone ahead and implemented that decision in amending the law by excluding the ENA used for manufacture of portable alcohol from the scope of the levy itself by excluding in the charging section. This will bring in a lot of clarity to those people who have been facing some amount of investigations and show cause notices issued by the under the GST as well as under the state VAT laws. This will make clarity for the future. The second important decision taken at the GST Council meeting is with regard to insertion of Section 11A. I think 11A is very, very important for the reason that we are all aware in the past GST Council meetings, particularly after 47 GST Council meeting, a number of decisions were taken in person to the representation received from the trade with regard to a particular trade practice and issue a clarification. It could be either upholding a point of view what the revenue was prophesizing, or it could be acceding to a request of the trade. But with regard to the position taken for the past period, a solution as is basis, I think some relief was given. But in this GST Council meeting, a clear-cut provision has been introduced in the law to enable the government on the recommendation of the GST Council to accept a trade practice which either resulted in lower rate of payment of tax or not payment of tax at all, and going forward to provide a clarity in the law so that the past issues do not become litigative in nature. Such provisions exist in the pre-GST law with regard to excise made applicable to service tax as well as customs laws. I understand that in the GST law, the draft which is being proposed would be identical to the what in the pre-GST laws in mandated. This is a much needed requirement because any clarification issued on the recommendation of the GST Council had also come up for challenge before the court of law many times by private litigants. But applying this through a legal mechanism, through an enablement power in the law, would go a long way in bringing authoritative importance to those clarifications for the past assessment practice. This is very timely because a lot of industries have been facing onerous investigations, and some of these issues already had stand clarified for the future period. For the past, there is a litigation potential possible. Using this channel of Section 11A, the government could, on the recommendation of the GST Council, provide some amount of a clarity and probably avoid such litigations. We'll have to wait for it. Probably this section will become operational because a lot of industry players may be eagerly waiting for when it will be regularized. The probability of this getting presidential assent and implemented under the central GST law and also mirror it in the state GST laws would take at least about 3 months. So 1st October 2024 should be looked at the most optimistic date by which this provision will be in the statute book for actual implementation by the government on the recommendation of the GST Council. This is a very important thing. The second important thing is basically, I think, I would take it to the IST part of it. The IST is basically arising on account of a judgment in a Maharashtra High Court, wherein a notice was issued to the government and was required to respond to this. This is in relation to invoices received in respect of services and could not be transitioned to the GST after 1st July 2017. There was a lacuna in Section 140 and a new proposal by introducing an amendment to this to enable the eligibility to the credit has been provided for. Now, this after nearly close to 7 years of introduction of GST, even the issue pertaining to the transition credit pertaining to the year 2016-17 is getting addressed, is an indicative of the earnestness of the government not to resort to litigation, but to provide a solution wherever it is found to be feasible and possible. I think this is a very welcome change. We are talking about the price escalation here, the bullet number 4. This is in the context of the IGST paid on export of goods or services, where escalation consequent to which supplementary or additional IGST has been paid. But the moot point is that once the export is made under IGST, they're eligible for input as credit. So far as the zero-rated supplies are concerned, they'll be consequently be eligible for those input as credit or the IGST paid as well. And this is a trade-friendly measure. Can we move to the next one? The amnesty scheme has been talked about in great depth. Section 128A is being introduced in the GST law. And in this law amendment, basically what is being provided is for the year 1718, 1819, and 1920, and 2021. I think basically what we are talking about the pre-COVID period, if notices have been issued under 73, where the taxpayers have not disputed the tax, but have not still paid the interest or penalty, in those show cause notices, the proceedings shall be deemed to be concluded, provided the tax has been paid by 31st March 2025. While the expectation of the industry was to give an amnesty, including those notices under 74, the government has considered, the GST Council has thought it appropriate that such an amnesty should be given to at least Section 73 cases. This in itself will give a lot of litigation taken off the book. And this would be a welcome change because the tribunal, which is going to become operational in a very short while from now, will not be burdened with this type of procedural issues or notice issued only for demand of interest or penalty. The outcome of this amnesty scheme is bound to be a mixed one because where there is no notice and taxpayers have voluntarily paid the tax and penalty, if they paid the tax, interest and penalty, there may not be any refund. But where the issues are outstanding in terms of a pending dispute, this would be a beneficial scheme. Now, there is a revenue threshold for filing departmental appeals have been introduced. Most of us are aware dealing with customs, excise, and service tax. in accordance with the national litigation policy, there is a move that the department or the revenue will not appeal against an adverse order subject to a monetary limit. In excise and customs, it has been kept at 2 crores for Supreme Court, about 1 crore for High Court, and about 50 lakhs for the tribunal. And income tax also has got different threshold limits. This was one of the long pending issues because government is not conceived to be a sort of a compulsive litigant before the court of law and honor the decisions of the lower judicial forum, especially when the monetary implications are much lower than what otherwise would have been outcomes. These monetary limits in the GST has been kept at 20 lakhs for tribunal and 1 crore for High Court and about 2 crores for Supreme Court. We need to keep this in mind. There could be some exclusions from the monetary limits for filing departmental appeals, particularly those where the decisions have been rendered holding certain provisions of the law or the rules or circulars as ultra-vires. In those cases, this monetary limits for filing departmental revenue appeals may not apply. But we will wait for a detailed circular to come in which all those matters would be very thoroughly discussed and detailed manner will be providing. This in itself, in addition to the amnesty scheme, is also going to bring down the number of appeals, especially those which are likely to be filed by the revenue in orders in which it feels agreed about it. And this is an alignment with the national litigation policy, as I mentioned earlier. Now, the other part is basically, I think, with regard to the pre-deposit. Now, the pre-deposit is something on which USISF and Deloitte and most of us have advocated before the government that at least take this pre-deposit to the pre-GST level. While in the GST at a sub-national level, in every state, we need to take a registration. And in every registration, if the maximum threshold of 50 crore or 100 crore IGST has to be paid as a pre-deposit, it would have an onerous financial burden on the taxpayers pursuing the appeal remedy. So the government, addressing this concern, has given some relief by reducing the CGST from 25 crore to 20 crores, SGST from 25 crores to 20 crores, and the IGST from 50 crores to 40 crores. But what is more heartening to note is that in respect of the percentage of pre-deposit is concerned, this is the maximum amount what I'm talking about, but the percentage of pre-deposit at the tribunal level has been brought down from 20% to 10%. This should substantially help those persons who are waiting for the tribunal to be constituted to prefer an appeal and pursue the remedies. Can we
Thank
move
you,
to the
sir.
next slide? Thank you,
So just if I may, basically 150 crores was the pre-deposit max. It's down to 80, almost 50%, and 30% down to 20. So your pay to play drops significantly, So that's the
absolutely mine. I think that brings focus as to how much is the relief that the government has given. Put together the cap as well as the percentage, right?
Yeah, I'll just take this slide and on the clarifications, I did explain on the FOC one. It's a huge pain point for many of you where let's wait for the fine print. But like I said, we expect it to be in line with 199. There was an interesting question raised that what if I have some exempt turnover, could be to the, a consulate, it could be a government service, less than 1 or 2%. But unfortunately, as things stand, it's written full ITC credit. And this is something that we did raise in some conversations saying, but we were advised that, listen, just first, let's get this in a way alignment. Then we'll see if a de minimis rule will apply. You may have some electricity you generate, could be different things that companies do. And what will help us is what are those one-off exempt supplies that you have? Send it to Shweta and Shreya. I think that'll help us to crowdsource these to give more specifics. Corporate guarantee, well, the valuation mechanism is expected to be clarified and better than the carte blanche 1%. What has been announced is that if you're in a taxable business, again, the zero value should hold good. The ITC on self-invoice raised for unregistered person, that's a critical one, which DPN sir, I'll hand it over back when we're talking about NOS. It's much more than, and in his assessment, he keeps telling me that, the plain vanilla amnesty announced for 17, 18, 18, 19, 19, 20 is certainly good, but this is a slightly more superior amnesty. So I'll reserve that suspense for him to explain. ESOP loans, because loans, some of you have had demands saying, if you get a loan from your intercompany, you should have paid a processing fee of 1%. So if you have a 100 crore loan, why didn't you pay on 1%? So we'll attribute on 1% GST at 18 lakhs. So these are some things that were there. Which again gets hopefully done away with. Next one, I think, is the only one in this whole council meeting that worries us. And we see where this is directionally going, not because of anything, because there are two Rajasthan High Court rulings where the challenge was there on how do I as a supplier know if my customers reverse the GST or not. There's no mechanism in place. So the court had asked the government to respond saying, what kind of mechanism are you getting in place? Um, we suspect that the mechanism would be, and because it's talking about evidence to be provided by the supplier, that at all post-sale discount, where there's GST adjustment, there could be an onerous requirement of giving a declaration, a certificate. We don't know the detail, but we were informed that yes, that's in the works. Though from USISPF, our request was to actually have a automated GSTN system where a credit note is raised and then that could be ticked off, and therefore from the buyer, and therefore there's no manual exercise later, and all of these happen 3-4 years, 5 years later's audits. How do I keep that trail? So watch out for that, because that's the only one that in a way worries. Extended warranty and warranty, we don't know the fine print. We'll need to watch, but from whatever it's coming in the family of clarifications that seem to be more industry friendly is all I can say. But maybe DPNC, you want to take over on the 16.5 and the 16.4 aspect, and then we'll move to the next slide. And you may please continue, sir.
Yeah, thanks, Mahesh. I think insofar as the issue relating to 16.4 is concerned, we are all aware that this section provides for a time limit within which you are eligible to take the input as credit, either on the invoices received or on the debit note received. Unfortunately, in the past, there have been several High Court decisions which have said that 16.4 being a part of the legislation and there is no ambiguity, and that timelines will have to be adhered to. In the initial period of implementation of the GST in the year 17, 18, 18, 19, 19, 20, and 2021, there have been a number of cases where taxpayers were either not aware of the timelines within which the returns were required to be filed, or there were a number of occasions where there was amnesty scheme for filing 3B returns or R1 returns by time and again extensions, and particularly during the COVID period as well. But unfortunately, in all these extensions of filing of return obligations, or for that matter, or the extension of filing the outward supply statement, etc., the timeline for actual availment of input as credit restricted under Section 16.4 did not get amended. In a way, the amnesty, what was given for extension of filing the 3B return, did not result in taking the input as credit beyond the stipulated time of 30th of September, or for that matter, the return filing month of September of the following year. Now, we are all aware that this got amended in 22 to November 30th as one cutoff date by which you can have the changes made. That means 6 months post the end of the financial year, you could have changed the eligibility to the credit for the preceding 12 months of the previous financial year. So the amendment now, what is being proposed in 16.4 is providing for whatever reasons you have not taken the credit, but you have filed your 3B return and claim the input as credit for those invoices or the debit notes. I think perhaps for the year 17, 18, 18, 19, 20, 21, the last date for availing such credit would be deemed to be 30/11/2021. So this, in a way, for those who are litigating this issue, those who have not completely closed this issue would get benefited. We'll wait for the circular, how this operational detail with regard to this big relief is being made available to those taxpayers. Maybe in a day or two, we'll get the circulars in, and that is an interesting read, which all of you can watch out for this piece. The second important issue is with regard to the NOS part of it, what Mahesh touched upon that. Whenever a reverse charge payment has been made, the time of supply provision provided for a specified time limit within which you are supposed to have made the time of supply kicking in insofar as this reverse charge payments are concerned, particularly on import of services, etc. Now, insofar as the GST law is concerned, for any procurement from unregistered person, the law provides for issue of an invoice by the recipient on behalf of the supplier. Insofar as reverse charge, there was no such exact clarity. And since time of supply depends upon the issue of invoice, when is the invoice required to be issued in respect of the reverse charge payment on import of services was not very clear. Certain amendments are being proposed in Section 13.3 and Section 31 to align that. And this is a very important thing. This will bring clarity. The third aspect of this reverse charge, where the amendment is being proposed in 31 and 13.3, is with regard to the invoices issued on reverse charge payment. pertaining to a period other than the period for which the invoice has been issued, meaning thereby, NOI judgment read it as an example. If any taxpayer has paid the tax relating to the assessment year 1718, the financial year 1718 or 1819, post the Supreme Court judgment in 2021-22, the tax authorities were taking a view that this invoice or the payment is pertinent to the assessment year 1718 for which the annual return stands filed, and therefore you are not eligible to take the input as credit because of the operation of 16.4. Now the clarification is coming very clearly post 53rd GST Council meeting that the year of issue of the invoice is relevant and not the period to which the tax invoice, the tax payment pertains to. So the time limit of computing the 12 months of the preceding financial year will be relating to the year of issue of invoice and not the period to which the tax pertains to. This will be a big relief for the taxpayers, and this also positions in a way that on reverse charge payment, the issue of invoice would automatically take care of the eligibility to the credit, and whatever the delayed payment happens on account of which I think penalty interest is applicable, that in itself independently will operate and will not work as a bar in availing the input as credit because of the operational limit of time bar under 16.4. This is going to be one of the major trade-friendly measures, and those who have not paid those who have paid the tax and facing challenges in respect of questioning the input as credit on account of 16.4 can rely upon this clarification circular to close the matters which may have been agitated in audit or assessment proceedings. Yeah. Can we go to the next slide?
Before we move to the next slide, I see one, of course, Shubha, you wanted to speak? You had raised your hand.
Yeah, please.
Shubha, do you want to ask a question right now? Okay, then maybe for later. And then Mahesh, I see a question from Google.
Yeah, I will answer that in the next slide. Over to you, sir.
Yeah. The other part is basically, I think, the GSTR 1E, an optional facility to amend. This is one of the long pending demands from the taxpayers that there is no provision for revising the return under GSTR, the GST regime, unlike the excise return and service tax returns. So, unfortunately, because of the very mechanism by which the GST is levied and collected and settled between the state and the center, any correction in the return could alter the settlement process, and also it could have a domino effect for the subsequent months. So therefore, I think a provision for revising the return was resisted by the government, but there has been a few court cases also on this matter, which has given some sort of an indication to the government this issue may be examined from a policy perspective. And this is where I think the government has now come forward. Insofar as your outward supply statement is concerned in the form of GSTR 1, if you have committed any mistakes or you omitted any one of those invoices for reporting, you can always carry out the corrections, and this will automatically take a note of in auto population of your 2B for the purpose of liability defrayal. But such an amendment in the GSTR 1 filed through GSTR 1A ought to be corrected before the filing of the liability return in the form of a 3B. So you have an advantage of correcting the mistakes, and to that extent, the 2B will be more accurate, and the mismatch issues, which otherwise results in automatic issue of notice under Section 88C and D, will get minimized. Going forward, I understand that the government has got a plan to hard lock the liability disclosed in GSTR 1 with a 3B, and if the payment is not made, automatically the self-assessment would be kicking under 7512, and that may result in a recovery proceedings. Now, while hard locking would be bringing more hygiene and discipline, it can also cause a lot of difficulty to the taxpayers. As a precursor to that, I think GSTR 1A is a facility provided, so taxpayers should be extremely cautious in ensuring that the outward supply statement is correctly reflected to the extent possible. And if there are any mistakes or typo errors or any correction to be done, use the GSTR 1A route before filing the liability return to correct it. Going forward, once the hard lock is introduced, probably this will be difficult for them to get out of the liability as a self-assessed liability. This is what I just want to put in a word of caution here. The other one is threshold B2C interstate supply. The limit was 2.5 lakhs. It is being brought to 1 lakh. The idea is that to have more granularity in the B2C transaction. On a B2B, we have e-invoices, and also the granularity is there without any threshold limit. Biometric-based Aadhaar authentication is some sort of a measure on account of the continuing GST frauds on account of fake invoicing. The government had introduced in the state of Gujarat, Pondicherry, and Andhra Pradesh as a pilot project. The pilot project in Gujarat has revealed close to almost 45% of the registrants and the suspected category found to be fake. Therefore, I think the council thought it fit that in order to prevent identity theft, misuse of registration for passing on the fake invoice, in respect of the risky taxpayers identified purely by the data analytics, they may be subjected to an Aadhaar-based authentication process before the actual registration is issued. I think these validations of registration through other credentials, if it is done in one state, I think the GSTN would auto-populate it for other states as well. Honorable FM in the press meet had mentioned that while this will be an all India rollout, but it will be a graded rollout considering the adoption and also the technology challenges. Proposal not charging interest on delayed payment of tax to the extent of amount available in the electronic cash ledger. This is again, it was a pain point. Though the tax got credited in the cash ledger, but for some reason the taxpayer did not file the return or filed the return in a delayed manner. The tax authorities were taking a very conservative view hold that notwithstanding the balance lying in the cash ledger, since you have not done the defrayal by filing the return, which is a trigger for payment of tax, we will continue to levy the interest. It would have amounted to the cash being with the government, but at the same time, the taxpayer asked to pay the interest as if the amount was not remitted to the government. Now, the government has come with a clarification. In those cases where there was a cash ledger balance, but returns did not get filed, the liability to the extent of the balance available in the cash ledger would not attract the interest liability. This is again a welcome measure, and these are all historical wrongs which are being corrected. The other part of it, I think, can we go to the next slide, please?
Darpan has an observation, I think, on
yes,
this.
Yes, please go ahead.
Please go ahead.
No, I think he just said he's
He raised his hand.
Sorry, sir, you mentioned about FM mentioning about this Aadhaar-based authentication rollout gradually. Is it clear that it will be done only once in the first state in which you register and then that will be leveraged by other states? Or is that is there a further area that we need to solidify?
I think, Darpan, the thing is very, very clear. When I had a discussion with some of the very senior officials of the GSTN, they had also clarified that the Aadhaar credentials validated of the risky taxpayer, once it is uploaded in the system, this will be available for fetching in respect of the same taxpayer seeking registration in other state is subject to a biometrics-based Aadhaar validation. These credentials will get auto-populated and they will not be called upon to do once again the Aadhaar-based validation. So the only thing is that as on today, it was in pilot. Now a policy decision has been taken to roll out. The gradual rollout, in my opinion, may take a few months going forward once the technology infrastructure in place and also the adoption by the taxpayers, because identifying the risky taxpayers through profiling on a predictive basis is something which the government is working through a 360 degree. Hopefully, those risk parameters are once well defined and put in place. I think the selection by the system alone will drive who will be subjected to a biometrics validation and who will not be.
No, so Deepan sir, I think the question is that, are the systems geared now, like we've been saying, it's like taking a passport. Once it's done, I don't need to, or Aadhaar card. I don't have to go every state again and again.
That's very clear. That's very clear. The GSTN is completely equipped for doing that.
Yeah, and so and I know this is. I understand the balance they're trying to find, and at least this seems to be a welcome move. My only request to, especially the industry chambers, is that we see on the ground that when these things are implemented, while the intent is to catch fly-by-night operators, the headwinds for legitimate businesses to register is quite significant. And we've discussed this with the RS, and we've showed in the examples of notices that people across industry have got. It will be very important to very quickly respond to the experience on the ground, consolidate it across various industry members, and share that feedback because it just it's decentralized now, right? So it's an early signal that needs to be sent. So just calling that out because I understand the direction, but I do worry about the headwind on the ground.
No, thanks for that. In fact, I did have a brief discussion with Bala sir, who's a JS2RS, and he did say, post the circulars being issued, you'll are more than welcome to tell us. There is an expected council meeting in August. Not that this will immediately come there, but from USISPF, thanks Darpan, and the request is to others as well. Whichever aspects you all feel have a right intent but have an apprehension of implementation, or have a right intent but has been drafted in a way that it's not working, let us know, because this is effectively like a budget for us in indirect tax or in GST after so many months. So great, thanks. Deepan sir, over to you. And yeah, sorry,
one more
Shubha.
hand raised. Oh, Anshul.
And maybe I'll answer Shubha's question because she's been struggling to unmute herself. But
Sure,
Shubha, we need to wait for the fine print. But the the precedent on amnesty schemes is you treat every notice to be a standalone one. Now, and it may seem absurd that if there are for 3 years, 17, 18, 18, 19, 19, 20, unless we need to see the fine print, but each stands technically on its own footing is a general principle in these schemes, but I don't want to conclude till we see that. Obviously, if it's a 73 one and you're getting interest and penalty waived, and if it happens to be like a reverse charge one, it means that you're entitled to credit subject to the timing, but more for that when we get the fine print. We're happy to share a brief point of view to all the participants after the amnesty comes, where a follow-up to the communication from USISPF on 3-4 areas where the fine print is expected to have more detail than what is at the surface of it. Yes, Anshul, you want to jump in, please?
Yeah, Anshul, please.
Thank you. Just on the last point that you had discussed about where there was a delay in filing the return, but the tax had been paid. If the assessee has paid the interest, which was demanded by the jurisdictional officers, would there be a provision to claim a refund?
Refunded back. We had a lot of intense debate internally with Deepan sir and few other colleagues of mine, but a straight answer is don't expect that, because all past amnesty schemes have in a way said whatever has happened has happened. It's so we don't prima facie believe, but again, what I'm just saying is pure speculation. Wait for the fine print.
Thank you.
Okay, so this
Ashok and Ashish, we'll get back to you on your questions. I think let's just wrap up the presentation first.
Yeah, and Ashish's question I'll certainly cover in the next one, because I promised to cover it in here. I think Ashok raised a point.
Ashok is on NOS.
On NOS, I'll hand it back to Deepan sir on that. Of course, the sector-specific points are here. We don't want to labor, and in fact, this is pretty much our last slide, and then we want to give you all an outlook on a few rate updates, and then what is the outlook expected in a bit of brainstorming. From the financial services sector, insurance one, the press carries about 12,000 crores of demands has been dropped. I'm not surprised. Even on the import of service, I did mention in my assessment, it will be at least few thousands of crores across even some of you all in this meeting and as industry at large. So I think the good part is these decisions that are being made are with the direction of unwarranted litigation being done away regardless of the size of the disputes. So to us, that's important. Certain other exemptions have been brought in, or clarifications on salvage value in motor vehicles and the wreck, etc. We also have engaged and given submissions. Happy to explain that. But if you're in that sector, I'm sure you know your pain point, and that's something that you need to look out for. E-commerce, clearly the 1% to 0.5% is again a working capital benefit. I talked about it briefly earlier. And the specified provision on penalty is something in relation to the small sellers that was brought in. Again, there seems to be some debate. Is this fully dealing with the whole thing? We want to see the provision there, because otherwise e-commerce operator was in a way made an onerous responsibility to be liable if the threshold of the small seller crossed the exemption, when there's no mechanism in place to track what that seller is making sales across platforms. Alcobev industry, of course, this ENA one has been a complicated one with the Supreme Court ruling, the Bihar High Court and others. Now at least it's clear it continues to be under the VAT system and not the GST, because then that VAT chain continues. And of course, Alcobev, some of you all have talked about economic surplus. That's still work in progress. That's not clarified. And I be aware that some disputes have started despite an earlier service tax ruling and a clarification. Defense sector, those exemptions have been in a way extended, and compensation cess on the canteen one is a small one, but I don't want to get into it in great depth. Railways, DPNC, you want to take that as well as the NOS query that Ashok has, that if he's going to pay tax under NOS for 17-18, what will happen? And maybe I complete what Ashish, you raised as a question, and I just wanted to mention that we did, in a bill to ship to model, the overarching principle used to be that, you follow the shipping location. There was a change made in the rule of 10(1) CA that got brought in, which in a way implied that the supply that you need to go, let's say you have bought goods in your individual capacity, and you live in Delhi, and the goods are getting shipped from Bangalore, but you had it to be billed to Mumbai, shipped to a friend in Mumbai. Which IGST should apply, account Maharashtra or account Delhi? Logically, it had to be Maharashtra because that's where the consumption is and the B2C tax should apply there. But basis a particular change, there was significant ambiguity because the address on record of the recipient was stated, and therefore does it mean recipient as in contracting recipient or the end customer recipient? And that's something that has fortunately changed, or rather has been announced that there'll be a clarification saying that they will in a way follow where the location of address of record of the delivery has happened. So that's something that I believe industry was already following, and now this ambiguity that came in light of the change that came into force a few months ago, that's something that seems to be addressed. Back to you, DPN sir, for the railways. I hope I answered your question, Ashish. Happy to explain it further. There is, and maybe even from our end, we as USISPF do share all our docs, and this had a very specific doc itself for 10(1) So this gives you a little bit of background of what was covered and what was our ask. And when it comes through, we'll get to see. I believe the outcome is already there in place, but is it exactly the way we wanted or not? But as long as the result is fine, it's fine. Happy to share. Shweta, I'm sure we can share this with our members, right? So,
Absolutely.
cool. DPNs, over to you for the railways and the NOS query, please.
Yeah. Insofar as the NOS query is concerned with regard to the tax now getting paid for the year 17-18, obviously the input tax credit will be eligible because you are issuing an invoice on reverse charge payment, being a recipient of service, and the time limit for availing will kick in from the time you have issued an invoice to the period of availment of credit. So your credit is absolutely safe, but for the past period, if you have not paid the tax, you may have to pay the interest along with it. And that's what the ruling, that would be the advantage for you. Insofar as the railways are concerned, Mahesh, I think as you're all aware, from last year, October, the railways were brought under forward charge. Except for transportation of passengers and goods, railways were by and large not subject matter for tax, except where renting of immovable property was concerned. While the forward charge made the railways liable to pay tax because they were accumulating a lot of input tax credit, the Railway Ministry had requested, so they made it forward charge. But an unintended consequence was there. A lot of movement was happening with regard to goods and services inter-railway zones. Railways found it very, very difficult to comply with. Most of the activities were revenue neutral. So I think status quo ante of pre-October 2023 is being restored. That's one major relief. In addition to that, some of the miscellaneous services which are provided by railways, like platforms, ticket sale, or for that matter, retiring room, or e-mobility solutions, parking lot, etc., etc. I think some of them which are facing the public-facing amenities have been exempted from payment of tax. In addition to this, the railways have been using the infrastructure of a special purpose vehicle in terms of the rolling stocks for the purpose of railways in a lease model. So the GST paid on their point was getting accumulated in the railways. Now the lease services provided by the asset holder to the railways, I think probably the exemption route has been adopted, as a result of which I think the railways cash flow will become better. So interzonal operations of railways resulting into an unintended consequence of deeming it as a supply, albeit it could be a transaction value, but railways felt it very onerous to comply with. The government has followed the restoration route, and it has also followed, so far as the assets are concerned which are leased, that has also been provided for in terms of neither supply of goods or services. So that is with regard to railways. Yeah, Mahesh.
Great. So, I mean, we are running against time and we want to keep 5 minutes for all questions. There are certain rate changes. You can absorb it. We'll anyway circulate this material. The only point which is linked to the future outlook on bullet 3 in the next slide, where we think the entire rate representation, we know some of you have a lot of rate concerns, will be considered by the upcoming GOM that's being constituted. This is the third time that the GOM has been constituted, but it's got to do with certain changes in the state governments that have taken place. There's no defined time frame, but we expect that in the August meeting, where probably a plan will be stated in terms of what time frame will be looked at. We do expect inverted duty rate structure, which many of you have asked us to represent, whether on the inverted duty for services as well as capital goods, should find some light, pretty sooner than later. This was even forming part of the Deloitte survey as a very high priority area in unlocking working capital. Online gaming, it's a contentious issue, but the 11A section, the DPN so painstakingly explained to all of us. Let's watch that space. I believe, and I would think that that provision maybe start being used more often than just the carte blanche circular, because many times the feedback given is circulars are not implemented. What's the real issue? How do we get certainty? So I believe 11A may be a mechanism that will be used hopefully more often than just the circulars, because then that even absolves any past liabilities. Not that there's a doubt of circular being retrospective. Tribunals, it's been around the corner for long, but this time it certainly seems to be around the corner. We'll have to watch how the appointments take place and by when this will happen and get constituted, as well as the National Appellate Advanced Ruling Authority. We're hoping gets resolved, set up for dealing with conflicting advanced rulings. That's what we had. Happy to take further cues. I
Yes, there's
see
two
Govind
questions.
Agarwal says if it's filed after, but I availed on receipt of the invoice. Supply file to return. Okay. The threshold was recommended. This is likely to increase compliance burden since the sheer quantum of true, Colonel Jaffrey, but it is what it is. And in terms of even e-invoicing, that sometimes that issue comes where I've noticed companies never thought they'll have that kind of this. But the whole idea, as you even see, and there's some small change for TCS to determine the place of supply. They're getting more and more to trying to do invoice-wise and tracking details. While it's a pain point, happy to understand if this is the pain so significant that will need more time to be prepared. I don't think they will be in a U-turn mode. If it is something that we need time as industry, we can highlight what those challenges are.
Only
Yeah,
concern was where does it stop? Today it's 1 lakh, then possibly it'll be 50,000 next, and then when, right? So I think we need to probably also understand that where does the threshold lie in terms of this amount? Because it's going to increase your work also.
True. I can only tell you that e-invoicing for B2C is in the works, so be fasten your seatbelts for that as well, because more and more they've seen that this is just getting into better compliance, and really of course that requires a larger conversation on whether there's IRP ecosystem and whatnot. We had a meeting with the GST and CEO on our survey last Wednesday, but can take it offline. But I think I can tell you it's not going to stop at 1 lakh. I don't think you like my answer, but that's an honest assessment of mine. Deep into the last question on this 16.4, where Govind has raised this question that if the supplier filed a return after the due date as per 16.4, but I availed the credit on the receipt of the invoice, whether any help in the council meeting?
Well, I think insofar as we had availed the credit and you have not reversed it and you are contesting that, you will get the benefit today. Because up to 30/11/2021 is the due date for taking the credit even for 17/18. So if you have kept the credit and you have disputed it, you will get the resolution in your favor. But you have reversed it and this is not in dispute. Probably my understanding is that it will not give you any relief. We'll wait for the fine print of the circular which will come. It's not a law amendment, it's a sort of a circular, but there will be a proviso to 16.4 may come. We will wait for that to come. But more importantly, Mahesh, one important point I want to leave it for all the participants today to just think it over is the proposed amendment of section 74A. 74A for the assessment year 24-25 onwards will completely replace the existing 73 and 74. Thereby, removing the time limit for issue of notice as well as the time limit for deemed closure of the proceedings into one time bracket. This, in a way, somewhere it is helpful, somewhere it could be a challenge to the industry. We need to wait for the fine print. But what I understand is that I think probably your 17.5 applicable to 74 demands will not be there. So merely by threatening to issue a 74 notice, I think a lot of people have been cajoled to make the payment because their credit will be on jeopardy. Going forward, 74A will not have an underlying limitation of not availing the credit at the recipient end. So it's going to be a big relief. But the other matter equally important is that when the extended time limit of 5 years and the normal period of time of 3 years is going to be truncated into one single time frame, what I understand it's 42 months. So probably I think we are going to have a via media, but more importantly, the adjudicators will have around 12 months time limit for adjudicating the notices. So you can expect the quality outcome, not in a great hurry within 3 months from the date of issue of notice. They have been trigger happy in confirming the demands. They will have a better time limit within which they can adjust the matter by duly taking note of the defense submissions. So 12 months time limit for adjudicating the demands, and also probably, 6 months time limit, not 12 months, I stand corrected. And also merging that extended period and the normal period demand into one, and also not having a 17.5 restriction on tax paid, where penalty imposed under 74, or for that matter, the proposed 74A, will not come in the way of taking the input as credit, or something which we have to wait and watch. There are much more details will be available when the finance bill is presented in the parliament.
Thank you, sir. I think we are really running short of time. One question that has often come to us, and I'll take just 10 seconds to pose on that, given that the finance minister has really said that there is an ongoing discussion now to have natural gas and ATF at least as part of GST. As a forum, there is a lot of push on us to really, do an advocacy on that. So any thoughts that you have of the observations of the meeting? I know petrol and diesel is something that she's outrightly excluded, but can we push for natural gas and ATF now? This is on behalf of a lot of our airline companies and also...
It's okay.
Quoting the government resources, Shweta, it's in the public domain, so we can refer to those. The Secretary of Petroleum has gone on record about a month back saying that I think Petroleum Ministry will support bringing natural gas and ATF under GST. The Minister of Petroleum and Natural Gas, I think when he assumed the charge on the day one, he made a statement that the effort of the government is to introduce GST for natural gas and ATF. So these are two statements from the Ministry of Finance. Insofar as the GST Council is concerned, the central government has always recommended, and it had come up for discussion in the past, and the decisions were deferred. What could be the implications insofar as the ATF is concerned? The problem is much lesser. ATF is completely consumed on business transactions. The input of credit will be available for the airlines. Even a low rate of tax means no net revenue loss or gain to the government as such. So it shouldn't be a problem in bringing ATF. Insofar as natural gas is concerned, we need to keep it in mind that one of the important questions being asked, how far the GST implementation has helped the common man in terms of making the product cheaper and customer friendly. I think introduction of GST into natural gas will give the upstream input tax credit for the gas processing companies. The distributing companies may not see a much bigger margin, but definitely the input tax credit available to the processing companies like GAIL, or for the matter ONGC, etc., there could be some incidence in terms of the cost of production, which ultimately will get passed on to the consumers. There have been some studies that the end customer price on account of the natural gas being brought into GST could impact up to 3% of the selling price of the gas at the retail level. So we need to wait for, but these two products to be introduced in a phased manner, instead of looking at one go, all the 5 petroleum products to be brought in GST, looks feasible. But what are the implications on account of that? The industry has to now itself start looking into. I understand that the capital goods credit will be a big advantage for those natural gas producing companies, which would definitely be improving their cash flow in terms of the utilization for the downstream products.
Thank you, sir. I'm mindful of the time. Thank you so much, sir. Thank you, Mahesh and the Deloitte team. This was absolutely insightful for us, as always. And thank you to all our members. If there are any questions left unanswered, please write it back to us. We will, with support from the Deloitte team, keep passing on all the collaterals to you and all the notifications and circulars, analysis of all of that. please pass on the feedback to that, and we will try to get back to to CBIC as soon as possible with all your feedback collated. Thank you so much. Very helpful on behalf of my colleague Shreya and me. Thank you so much. This is very helpful.
Thank you.
Thank you, everyone.
Thanks
Thanks.
to
Cheers. Bye-bye.
everyone.
Thank you, everyone.
Thank you.